Interest rates just jumped up to about 6.85% on average, according to Freddie Mac. And I want to explain to you what this means to you as a buyer, because I'm doing this video in December of 2024. We're heading into 2025, and we've had a fluctuating interest rate market this year. So let's dive into it. First of all, let's talk about where rates were a few months ago. So just in September, interest rates had gone down a little bit to an average of 6.08%. So when that happened, the market started to stimulate, pending sales went up, prices started to go up, and we really saw some more demand in the marketplace. And what this really tells us, now I'm in Orange County, California, and I would say that this video really applies to most of Southern California. So this is not like a all over the place, but in Southern California, you know, if rates go to around 6%, the market is stimulated and it starts to move upward. And so now interest rates have gone up to almost 7%, and there's a little bit of a slowing down effect. Buyers move a little bit more cautiously, they are a little bit more payment conscious, and they lose affordability. They could have afforded a more expensive home, now it's gone down. Right now, if you were to buy the same home, let's say for $1 million, and I'm not going to do a full math analysis, but like you bought a home today for $1 million at 6.85, or you know, a few months ago at 6%, you're looking at somewhere between a $300 and $700 difference in your mortgage payment, and that is a huge number for a lot of people. That's a huge portion of their budget if they're looking to buy a $1 million home. Why did rates go up? Well, the interest rates right now are very tied to inflation. And the mortgage market is paying very close attention to what the Federal Reserve is saying their plans are for interest rates. They cut in the federal funds rate a few times this year, which was good. They did a 0.5 point cut, then a 1/4 point, another 1/4 point. And so we were thinking, or the mortgage market was thinking, in 2025, they're gonna do several more cuts. And so if that happened, then interest rates were going to kind of follow suit, and there was gonna be some downward pressure on interest rates. But in the recent Fed meeting, Jerome Powell came out and said, hey, we're only gonna do 2 interest rate cuts next year. And so that's a lot less than the mortgage market was hoping for. And it reacted to it by pushing upward pressure on interest rates. It kind of had a knee-jerk reaction to it. And so rates have gone a little bit higher, and rates are going to be highly dependent in 2025 based on the news from the Fed. So the Fed will meet every month or every quarter or however often they meet, and when you pay attention to those meetings and what they say about interest rates, that's going to be the determining factor of what's going to happen to rates. So I would be weary to really trust any predictions you're seeing out there in the marketplace. I have seen many mortgage loan officers, in an attempt to get business or gain credibility, promise that rates are going to go down only to see that rates go up. So I wouldn't give too much credibility to any of the news right now. I would pay close attention to what Jerome Powell says. And of course, we'll do some follow-up videos on that. But as of right now, rates have gone up a little bit, and we're anticipating in 2025, they're likely going to remain around this area. So somewhere between 6 and 7%. I can tell you if they go above 7%, housing prices will go down. You might think that that's a bad thing, but if you're a buyer, you absolutely want interest rates to go up, because if they go up above 7%, you can buy that home at a discounted price. Then when they come back down to 6 or 5%, you can refinance so you get the better price and the better payment. That is my personal opinion. Why would I want to wait for interest rates to go down so prices start shooting up and now I'm in a bidding war with 50 other people? I'd rather buy at a lower price, because the interest rate, it's so easy to refinance for most people once rates go down. I think people think it's this complicated thing, but it's really just calling your lender, hey, you guys got a better rate, great, let's refinance. We can tack on the fees onto the loan. So there's lots of flexibility there with refinancing. Of course, homes have to maintain their value and all of that. But with that being said, if it goes above 7, prices are likely to go down. If it goes below 6, prices are gonna really go up, and they're gonna go up quickly. So if you're a buyer, pay careful attention to this. I would say it really depends on what price point you're searching in, because if you're sub 500,000, if you're sub 750, it's really not gonna affect you. there's such little inventory in that price point that prices are just gonna kind of keep going up in that price point. But if you're searching above 750 or above 2 million, this could really impact the numbers that you're looking at. So any other follow-up questions, please reach out, comment below. Would love to shoot some follow-up content for you. This is where rates are at now. This is what we're kind of anticipating for 2025. Comment below any questions you have, and I look forward to seeing you guys in the next video.